Welcome back, students. This is the second part of the difficulties in the measurement of national income. Here we will discuss the statistical difficulties. In the last part we discussed conceptual difficulties. Here practical difficulties or statistical difficulties. In practice, number of difficulties arise in the collection of statistical data required for estimation of national income. Some of the practical difficulties are: number one, problem of double counting. The greatest difficulty in the calculating national income is of double counting. It arises from the failure of distinguish properly between the final and the intermediate product. For example, flour used by bakery is an intermediate product and that is by household is a final product. So this problem arises while measuring the national income. Second, existence of non-monetized sector. In India, especially in rural areas, there exists non-monetized sector. Agriculture still being the nature of subsistence farming, a major part of production is partly exchanged for other goods and services. It is excluded while counting national income. Third, inadequate and unreliable data. Adequate and correct data on production and cost data relating to crops, fisheries, animal husbandry, forestry, construction workers, small enterprises, etc. are not available in the developing countries. Besides, this data on unearned incomes, consumption and investment expenditure of rural and urban population is also not available. This does not reveal the actual size of national income. So people do not have the real adequate data and reliable data so that we can measure the national income properly, and they don't provide also. Next, depreciation. Depreciation refers to the wear and tear of capital assets due to their use in the process of production. There are no uniform or common or accepted standard rates of depreciation applicable to the various capital assets. So it is difficult to measure correct deductions for depreciation. If we can't measure the depreciation, then net national product we cannot get it, because NNP is equal to GDP minus GNP minus depreciation. If the correct depreciation is not there, the figure of depreciation is not there, then it is very difficult to measure the national income. Next, capital gain or losses. Capital gains or capital losses which occur to the property owners by increase or decrease in the market value of their capital assets or changes in demand are not included in the national income, because these changes do not result from current economic activities. Next, illiteracy and ignorance. Due to ignorance and illiteracy, small producers do not keep an account of their production. So, they cannot give information about the quantity or value of their output. Next, difficulties in the classification of working population. In India, working population is not clearly defined. For example, farmers in India are not engaged in agriculture round the year. Obviously, in the off season, they engage themselves in alternative occupations. In such cases, it is very difficult to identify their incomes from particular occupation. And the last, valuation of inventories, raw material, intermediate goods, semi-finished, and finished products in the stock of producers are known as inventories. Any mistake in measuring the value of inventory will distort the value of final production of the producers. Therefore, valuation of inventories requires careful assessment. So these are the statistical difficulties. These are the 8 points. They are coming under statistical difficulties in the measurement of national income. So students, if the question is there, explain the difficulties in the measurement of national income, you have to give both. In the previous part I told about the practical difficulties, conceptual difficulties, and in the part 2 statistical difficulties. So all the points you have to give. Here 8 points are there under statistical difficulties. Every pointer is important. You have to give the pointer and explanation. Thank you very much.